Hello and welcome to this special budget coverage, ongoing coverage of the Union Budget 2025. Yes, it's finally out and you're part of India's hard-working middle class. If you are, then there is plenty to cheer about. The government has rolled out major tax cuts, which means that there won't be any income tax if you earn up to 12 lakh rupees a year. It is true. And if you're making 24 lakh rupees annually, you'll save 1.1 lakh rupees in taxes. So more money in your pocket, that's the government's idea. More room to spend, save or invest, but that's not all. This budget isn't just about tax breaks. The government is also tightening its belt with a fiscal deficit target of 4.4% for FY26, which means that they're serious about managing the economy responsibly. To break it down for us, Gokul Chaudhri is joining us. He's President of Tax at Deloitte India. Mr. Chaudhri, pleasure having you on this continuing coverage on the Union Budget. The big headline, of course, like I was telling our viewers, from the budget is the zero income tax for those earning up to 12 lakh rupees and significant savings for those who are earning 24 lakh rupees a year. So from a taxation expert's perspective, how transformative do you think this is for India's middle class?
I think it makes a tremendous difference. And Vikram, just to sort of add to what you said, if you're a salaried class, you get another 75,000 of standard deduction. So really, you could be earning as high as 12 lakh 75,000 and still be below the threshold for taxation. Really to get an income of close to a lakh or more every month and not being subject to tax, I think is a profound move for India because India historically was seen as a very high tax jurisdiction. I think that has changed. I think if we look at even the 24 lakh slab, which of course again gets added by the 35,000 rupees of standard deduction, think about it. A person really earning 24, 25 lakhs has an effective tax rate of just about 13%. So I think it's a very sensible, it's a progressive tax, and it's something which should drive greater compliance. I think this is also to be taken in context of the fact that personal income tax today constitutes the single largest part of the tax basket of the country, and it's growing at 16%. So I think the finance minister is rewarding back and being generous with the middle class because the government recognizes that this class is driving not just consumption but also bringing in taxes responsibly.
Think that target when it comes to consumption and savings will be achieved, Mr. Chaudhry, because there is inflation. Rising costs are a concern in our economy. Would those offset what kind of gains we are expecting when it comes to consumption and savings?
So I think the finance minister did talk about in part B of her speech on taxes. But in part A of her speech, she emphasizes what all the government is going to be doing to try and increase the productivity and efficiency of the farm sector, which means effectively the government is trying to say we want to make sure that the farm sector's productivity increases such that the flow of goods and supply of goods and services into the market through the rural economy also increases and such that the demand supply gap does not lead to it does not create additional prices. So yes, more money for the taxpayers to spend, but at the same point of time, greater productivity in the economy, specifically in the agriculture sector.
Mr. Chaudhry, while the government is very keen to put more money in the pockets of the middle class and has been generous with tax cuts, it's also targeting this fiscal deficit target of 4.4% for FY26. Are they walking a tightrope, you think? Do you see this as a well-balanced move, or could it put pressure on public finances in the long run, in the kind of public spending that they intend to do as well?
So I think the couple of things which are there. It is certainly a tight walk, but I think the finance minister has been prudent. The finance minister has been prudent to recognize that overall macroeconomic stability is extremely critical to drive growth, to drive investment into this economy. So she has been careful to make sure that she holds her commitment to bring down the fiscal deficit, which she had promised last year that she would bring it to 4.5 to or less. She's brought it to 4.4. So she's trying to keep to her commitment on the glide path there. The piece which is there is she is banking on the fact that the consumption will come into the economy, and she's also recognizing that a lot of the infrastructure spend will need to be supplemented through the sovereign and the pension funds. Think about it. The government has increased or extended upon the exemption for sovereign and pension funds by 5 year cycle. A 5 year cycle for pension and sovereign funds could easily absorb 25 to 35 billion dollars more of investment into infrastructure. So I think she's recognizing the role of newer sources of capital to come in to supplement the infrastructure play, and therefore be able to balance the books and keep to 4.4.
When we talk about this revenue loss, Mr. Chaudhry, and that is going to put that much more pressure on the kind of debt that the government incurs as well. But the target over there is debt to GDP ratio. They want to reduce from 57.1% to 50%. So I'm just wondering how realistic that goal is, because if you're going to cut down your revenues, you will have to raise more debt.
Well, I think the piece which the government has also been conservative upon is the divestment. We don't see much of a target there. So I think the government may well look at alternate sources of capital to make sure that it can fill the gap should the gap arise.
Tell me about the MSME sector as well, Mr. Chaudhry, because that's where we're seeing a boost come through, a 10,000 crore rupee fund of funds. From a tax and investment perspective, what more could have been done to help these smaller businesses? Because they are growth drivers for the economy, aren't they?
I think the piece which has happened for the MSME sector is that they need more liquidity, and I think the finance minister recognizes that that is a critical need. But similarly, the flow of credit and the flow of liquidity is being brought in through the measures that the Reserve Bank announced a week ago. So I think the piece which is there is that it's supplementing the Reserve Bank flow of capital with what the government is trying to do through its fiscal policy. So those are two initiatives which they are trying to bring in. They're also hoping that by having increased the MSME threshold, the MSME sector will be larger, and will be a larger segment of it will be able to get better collection of their funds from their uh, customers. Because remember that if you do not pay your vendors who are MSME on time, you run the risk of losing the tax deductibility of that amount.
Mr. Chaudhary, I was also looking at the insurance sector, where now the government is okay with 100% FDI. Certainly, this would have implications on the financial services sector. What exactly do you read them as? Because if you're looking at the kind of tax revenues, overall tax revenues as well, with this kind of opening up for the insurance sector, what do you see that leading towards?
I think the piece that the government is doing is dangling a carrot here. It's saying we will allow you to increase your FDI from 74% to 100%, but the insurance premiums that you collect, that really needs to get invested back in India. So really what the government is trying to do is trying to ensure that the virtuous cycle of investment through insurance collection go back into the Indian market and go back hopefully into the infrastructure sector, which needs long-term capital sustainability. So I think the government is trying to, for the first time, link foreign investment with where the money finally moves.
Mr. Chaudhary, with this budget, it seems to be clearly favoring direct tax relief. Do you think that we are moving towards a more simplified tax system, or do you think that complexities still remain that need to be ironed out?
So, one of the important parts is 2017, our country embarked on its single largest tax reform, which was the rollout of the GST, where we brought in all our legacy and some of the colonial taxes, like excise duty, and made ourselves into a common market for indirect taxes. So, therefore, I think the first part of the journey of tax reform started in 2017. Large part of that journey is now complete. We do have some of the GST Council meetings still happening, which are bringing in more efficiency into the working of the indirect tax. I think the finance minister today, having experienced the success of the indirect tax reforms, is ready to embark on the direct tax reforms, which is why she talked about last time that she'll bring out a simplified income tax act and she's going to table it in parliament next week. So I think the confidence that the government today has is we worked on the GST reforms. We've done a large part of simplification on customs. Now let's look at the third part, which is the income tax. I think on the income tax, it's not just simplification for the sake of simplification, it's also simplification because you want to reduce disputes. Because close to 1 year of tax collection of the government of India is sitting in tax disputes, and the government could well do without that disputes.
So do you see that actually happening, that tax disputes will actually go down with the kind of approach the government is embarking on? Because you have to agree, this is a pivot. When you're talking about a consumption-driven economy, this is the first budget in many, many years that we are seeing it take that track. Considering that we're going to have that much less of government spending, the rise in government spending is going to be that much less. At least this is what the budget is indicating. How much of a pivot do you think is sustainable from what has been done today?
I think if we look at the budget document on a plan to plan basis, the expenditure of the government on capex is probably about 7 to 8%, 9%, which is the number. However, if we look at the actual spend, because the actual spend last year was lower, the actual spend is expected to be higher by nearly 17%. So I think the government is going to bring in more money into capital expenditure this year than it did the previous year. That's one part. B, I think by providing macroeconomic stability, the government is confident that the capital flows from outside India will continue to be buoyant. So that's the second bit that they're making upon. The third piece which is there is that they are seeing that there's a opportunity to do a lot of asset monetization during this period, such that they can recycle a large part of what is already embedded in the infrastructure cycle to be replenished back into the cycle with newer projects. So therefore, the asset monetization play is going to become a far more critical play than ever before in the next 5 year cycle.
So tell me, considering all of the things that are in play for the middle class, what would be your advice to them, to taxpayers? How should they best take advantage of the new tax regime to maximize their benefits here on?
I think the part is the government had brought in a new personal tax regime a few years ago, but they had carried on with the old regime also because that was sort of littered with a lot of exemptions, but some people have become very comfortable with that. I think with the changes which have been announced by the finance minister today, instead of having two-thirds of our people going for the new tax regime, which was before these changes, I think we'll probably see close to 100% of the people moving to the new tax regime going forward because it's certainly going to be more advantageous prima facie to the taxpayer community. So I think the government has moved towards a simplification of personal taxes, which is a good move. And I think that will drive a greater compliance in society.
Chaudhry, also I'm looking at the leadership in the digital space. Do you think this budget provides enough incentives for India's digital and tech economy, or do you think we could have expected more in terms of innovation and skilling as well? Because that's a piece that is constantly moving, and especially when we are talking about semiconductors and all of it, to kind of keep abreast of everything that is happening in the competitive landscape around the world, what more could the budget have done?
Well, the government brought in, as you correctly said, a 10,000 crore fund for startups. The question really could be, the first cycle was 10,000 crores. Do you think we could have actually done double or triple of that amount today in this budget? Did we have to sort of just repeat the number, or we could have gone to a multiple of that? That's, for example, one. But I think there's also a play that the government is saying that we want to try and bring innovation at the grassroots, which is where they brought in the Atal Innovation Scheme for the schools, 50,000 schools to have innovation centers to make sure there's broadband connectivity going into the secondary schools. I think the government wants to try and balance out between what it spends on the IITs, and of course, they've said they're going to spend more on the top five IITs. But I think they're also saying we want to widespread the tech build out by actually educating our people, our younger talent to be far more tech savvy than before. So I think they want to try and start early in the demographic curve of learning for the younger people to be more digitally savvy.
When you talk about the Make in India push, do you see enough of that taking place with the kind of budget that has been presented? Because as far as the creation of jobs is concerned, that push by putting more money in the hands of the middle class is one thing, but employment opportunities need to grow. Is that happening through this budget?
I think one sector which certainly stood out was the electronic component sector.
Yes.
So think about it. At a certain point of time, the government said we wanted to encourage the likes of Apple, for example, to actually set up assembly plants or manufacturing plants in India, which is a success story today. Now, what is the government saying next? Well, if you got to get the front end guys trying to do the assembly here in India, then the downstream part is extremely critical part where we get the component manufacturing to also move into India. And therefore, one of the things that they are doing is they have given both income tax as well as indirect tax certainties that were required for the component manufacturing to happen for the electronic manufacturing industry. So I think they have picked up one sector, they're testing this out, they'll see the success as to how it works there, and hopefully that becomes a blueprint for how they approach this for other sectors going forward.
Chaudhry, this push towards consumption is coming at a time that we've seen our GDP take a bit of a knock in recent times, and there are several factors that have led up to that situation. Do you think at this point in time the fiscal policy, as we see it through the budget, needs the kind of support that the monetary policy could give, and do you see that coming now?
So I think the government recognizes that they had to do a pretty fine balancing out here because at one point of time they did not want to make sure they did not want to bring in any new taxes, any bad taxes to try and supplement the strength of the exchequer. On the other hand, they wanted to make sure that the consumption story is built upon, and therefore they wanted to give the tax relief to the middle classes and to middle earning community, which was a critical part. So that was the second imperative that they had. The third imperative that they have is there are global headwinds, and those global headwinds are creating a lot of uncertainty. And I think they wanted to keep some part of their firepower or the gunpowder dry to try and see as to what they need to do in the weeks and months ahead as they deal with the global uncertainties. So I think, as they say, the thori story baki hai, because I think the government would like to make sure it has some amount of leeway to play around with during the course of the year, depending on how the macroeconomic play and the geopolitical play happens, specifically around the tariffs and the disruption to supply chains.
So, do you believe that there is enough risk mitigation through this budget? Global uncertainties, the large part of it right now are the kind of tariffs that Donald Trump could impose. If that is the real risk, and how much of that are you seeing getting addressed through the budget, through the policy measures being announced here?
I think the government seems to be reflecting a fair degree of realism as well as confidence that they will be able to get into a conversation with the stakeholders who are going to be involved in the tariff discussions. So I think the government is conscious that they did not drop the tariffs unilaterally. I suspect they recognize at a certain point of time conversations and dialogues will happen. Not just between India and the US, but across multiple countries. And therefore, they would like to make sure that they have something to offer at the point of those conversations. So I think they have, to some extent, kept to a status quo in some of the measures. Of course, they're trying to carry out some rationalization by dropping the number of custom rates and which are there, drop it for some of the life-saving products. But largely, I think they have kept themselves open for a conversation where they have something to give away for something that they would like to protect.
So, looking at the overall picture and considering the move of the government, because it has been a capex-heavy budget that we've seen year after year. Now that we are seeing this move towards empowering the middle class, giving more money to them to drive consumption, what are the factors that you think led to the government taking this call to pivot?
I think the government recognized that the middle class was hurting. And I think this was becoming more and more visible through not just the public media conversations, but I think it was also ground reality that the government did assess because let's recognize that a lot of the people in the policy making in the government and politicians certainly have been out on the field on the ground for a fair bit of time in the past several months. And I think they've heard it loud and clear that there's a bit of pain, a lot of pain being experienced by people in the middle classes who are actually getting hurt by the high inflation that they experienced. And at the same point of time, some of the wage stagnation that has been experienced by the economy. So I think the government did understand that there's a bit of hurt and this needs to be addressed. I think they also recognize that if they look at the collection that they have had from personal taxes over the last few years,
Yes,
there has been a buoyancy.
yes.
And the buoyancy needs to be rewarded and encouraged.
We'll see exactly the kind of rewards that the government is able to procure with the kind of route that they've taken with this budget. It's definitely a pivot and a big one at that. And I'm sure we'll be able to reconnect and discuss what the government is able to achieve over a period of time with this approach. Gokul Chaudhri, President of Tax at Deloitte India, such a pleasure having you on ET Now to discuss the budget and more.